All right, so yesterday we started the lesson, and that was a very short lesson, by the way, for traders to be able to make snipe entries in the markets, make big decisions by using moving averages, and then also RSI to confirmation, which is moving averages, helping the trader to be able to identify market trends, and RSI to use it as what as confirmation entries. So yesterday that was a short or brief discussion we had, and we ended the session. And I believe you've started using that because it's really working. It's helping traders, and I guess you can also take your time to go through that. um if there is any challenge, as you keep learning day in and day out, you take time to ask, then we take our time to help you or assist you in understanding the concepts or the lessons. In as much as that, always you have to ensure you go to the YouTube channel, learn, watch the videos there and learn out of them, so that we can all progress. Yeah, there is nothing so interesting. As you continue your trading journey, you build your professionalism, right? And profession can be built when there is good knowledge. That is the reason why in every profession they give you the opportunity or the time for you to go under training for minimum of 3 years or 2 years, 2 years, 3 years, and maximum 4, 5, 6 years. And then I think in institutions like doctors, medicine, medicinal courses and stuff, they go through maybe 7 years. So you need to understand the process of learning, becoming professional in your trading journey. And I believe this session is mostly meant for individuals who are willing to take their trading lesson, their knowledge to another level. Because signal is provided, but I've always been saying, um, providing signal is just like maybe an egg which has not been hatched. Okay, egg that has not been hatched. So you are just in the process of waiting to be hatched, so that you can follow the process for you to also start feeding yourself. So if you depend all your life on expecting signals, you are not responding to growth. Okay, if you depend all your lifetime in the markets expecting signals before you trade, it simply means you are not responding to growth. And as a person, you need to understand growth matters, and growth in knowledge is what we are talking about here. That is the reason why we gather here every morning like this to learn about technical analysis, which also happens to be the backbone of trading. So if you want to trade to generate more profits, then you don't need to ignore the session on technical analysis. You need to take time and be well endowed in the sessions. Be well endowed in understanding, and be well endowed in all aspects of the market so far as knowledge is concerned, to ensure you are also growing in your area, right? All right, so let me share my screen for us to start with what we have to share this morning. Okay. um, I believe my screen is visible now. So yesterday, before we started that discussion, I told you I intend we bring a new lesson that we may take its bits, even though I would summarize it, or yeah, I would not make it too long, very short lesson, but packageable to ensure that one too may also help impact your understanding about trading. It may help you to make good decisions about the markets. And I think this session has taken, or this lesson has taken almost 2 months or so. So we will wrap up for other leaders to start sessions to ensure there will be cycle and then also consistency in our lessons. right? So I wouldn't be the only person to handle all the sessions, but other leaders too will be available to handle part of the sessions to enhance smooth progress. All right. So now there is a simple lesson that's mostly, even though it may seem simple, but sometimes it becomes so confusing to a lot of traders. That is um what we call smart money concepts. Okay, smart money concepts. And due to the nature of this session, or this lesson, sometimes it sounds so complicating to some traders or a lot of traders. And over here, what we are going to do is we are not actually going to um deeply talk about smart money concepts, but our focus is to learn how you can understand smart money concepts by using what we call smart money. So smart money indicators. Smart money indicators. Now, when we talk of smart money, it's a way that what we call institutional traders enters into the market. And the thing is that every market is handled by two group of people or two categories of people. That is, the first one is smart traders, and then also the second one is retail traders. So always the smart traders have their style, their system of trading, as well as the retail traders. So with the retail traders, we find ways like using price action indicators, this, that, to make entries. And then also the smart traders also find their ways out in the market by suppressing, I use the word suppressing, opportunities where retail traders exist so that they can eat the money in the market, which simply means for you to be able to trade and continue remaining profitable in the market, it's very fair for you to get opportunity to also learn about their ways. Yeah, without their ways, you can still be making money, but if you learn their ways, it'll build up more courage, it'll build up more momentum, and it will give you a better drive for you to understand how to position yourself in the market. So actually, when we talk of smart traders, that is mostly institutional traders like the banks, hedge funds, mm, hedge funds, and what again? Yeah. So those people are mostly called institutional traders because they always want to find ways and means to ensure they can control things in the market, right? They always want to ensure they can find ways and means to control things in the market, which simply means if you are a trader, it's good enough or to have fair better knowledge about the market. Now, um what institutional traders do and how we can understand their ways is by studying what we call the market structure. So they mostly follow the structure of the market, allowing the principles of market structure to take over, or they dominate the market structure by ensuring that the uptrends, whether bullish or bearish or equilibrium, they may be able to assess opportunities that exist in such areas. So basically, when we talk of market structure, every market can be observed in three, or there are three waves in every market. There are three waves in every market. A market may be a bullish, bearish, or what we may call it sideways. Okay, so bullish, that is uptrend, bearish, that is downtrend, and then also sideways markets. So the responsibility of a trader or these traders, they ensure that they will be able to understand the key areas, what brings up a market to be bullish or uptrend, what brings market to, or what leads market to be downtrend, and then also what leads to sideways markets, right? And our ability to understand this would help to ensure that when we talk of markets being an uptrend, when do we say a market is on an uptrend, and when do we say a market is on a downtrend, right? Right. So over here, our responsibility this morning is to be able to understand what do you mean by an uptrend, what do you mean by a downtrend, basically in the precision of what of smart traders ideas, right? So over here, first we have what we called uptrend or bullish, right? Now, simply, a market may seem to be an uptrend market or a downtrend market based on how market highs or candles forms different highs and then different lows in the what in market structure, right? So for instance, maybe this is a chart. This is how the chart begin, and as usual, we understand how the market operates. The other time I use the line to interpret that to you. So in every candle that you see, it starts like this. So as you see, as it begins like this, maybe it starts, buyers begin to start or sellers begin to start like this, then it begin to push up. Then it starts like this, it goes up, it starts, it drops, it goes up in that order. So if before a market will be able to form all these angles of getting down, going up, getting down, going up, that is where the institutional traders to realize that at a point in time, the market begins to form new highs and then what new lows. So if an institutional trader is observing the market or a trader is observing the market, he intends to observe the market from two different angles. That is being able to observe opportunity where there will be highs, where there will be lows. So the more it drops, the more it rises. He consider those areas to be highs and then what lows. So if it's dropping, if it's rising, when the market is dropping and rising, an institutional trader, considering the structure of the market or considering the entire chart, will be able to identify key areas where he will say, okay, this place is a high, this place is a low point, this place is a high point, and then also what a low point at a point in time, right? So if we are able to, or as a trader, if we consider these key areas, it will help the trader to understand what he may be able to do in the market at a point in time. But the interesting thing is that this thing has been simplified, and using your trading view, you wouldn't stress yourself too much, but you will be able to use your trading view to get indicators that have simplified all these things in the market for you. So your responsibility is to follow that and then also interpret it based on how you've learned and then understood the concepts, right? So this one session wouldn't be more of theoretical. We'll go straight to trading view. We'll go straight to trading view. So let me see. Let me know. But before that, let me know if you are following. Let me know if you are following. Are you following? Are you following? All right. So simply on TradingView, let's go to TradingView. Uh okay. So quickly let's get TradingView up. All right. So now on TradingView, we will have to click on charts. Okay. So we have to click on charts first. So I believe you already have your TradingView. So this is not the time for me to waste time talk about TradingView here and there. So let's click on charts. Let me see. Okay. All right. Very good. So these are charts. All right. So I believe you can see, right? Let me turn off all these things. So this is an actual chart without anything. Right. Let me turn off all these things here. Okay. All right. Okay. So we have the chart here, right? So the first thing that we are going to do is we are going to I guess we've discussed about what do you call all right. So let's click on, you click here. So we are going to use the tool here, the TradingView tool. So click there, and then let's use indicators. Okay, indicators. Let's use indicators. Now we have click on indicators here. So over here there are different forms of indicators here, and I guess leaders has taken this through or the most of them. So we are going to search for what we called smart indicator, okay, or smart money indicator by, there are different forms here, but we are going to use Algo. Algo. So Algo, this is what we are going to use, using the Algo indicator, right? Yeah. All right, so let's tap on it. So we've already added this here, right? We've added this here. I guess you are following. Let me know if you are following. Are you following? All right. All right. Okay. So over here, let's go. Let's click on the charts. Right. So that's what we are seeing here. We have the charts now. Very good. So we are going to see a few things here, and I'm going to take time. We explained all this before. Yeah, I'm going to take time. We explain all this. So over here, we can see few things here, like like BOS, COH. Let me see. Okay, yeah. So we can see EQL. So we are going to take time to explain all these things, right? We are going to take time to explain. I want to simplify this particular session by not complicating things. So I just don't want to use the normal channel of starting from Genesis to Revelation. But then we have to go straight forward to look at the exact message, right? So now, when a market forms, okay, or when you look at a particular chart, for instance, if there is nothing here, let me turn it off first. If there is nothing here at all, we can see this is what we call the market or the market structure. Okay, this is what we call the market or market structure. So how the market has formed within a period of what, a period of time, where we can see buying points, selling points, buying points, selling, buying within a particular time. That is how we can turn up to say that this is a market, this is a structure of the market. So as the market begins to form new highs and then new lows, as it continues to form new highs and then new lows, that is when we say that now it's a bullish market or it's a bearish market, or it's a sideways or it's a sideways market. Now, as we observe where market forms a new highs and then also lows in the market, realize that at a point in time, before market will change to bullish or bearish, there is what you called change of character. Okay, change of character or break of structure, right? So over here, once we turn on the smart indicators, these are the structures of the market where smart traders understand and they use that opportunity to make decisions in the market, right? So that is the reason why we are also going to use the what do you call, the smart money or the smart indicator. So let's turn it on back. Where is it? Okay, smart. Okay, so let's go now. Let's go back to the setup, how to set it up before we will interpret. So let's click on the settings. Okay, so this is where we are going to do our lesson. This is where we are going to take the effect of the lesson from. So all right, so over here we have input, style, visibility. So we are first going to set it up, and then through the setup we start learning from here. Yeah, right. Okay, so um first let's click on inputs. So over here, when you come here, we have what you call real internal structure. So basically, when we talk of break of structure, these are the common terms that we are going to see, and then also change of character, right? Break of structure, and then also change of character. So at a point in time when the market begins to form a new highs and then also new lows, so at every higher high that we see in the market, a new structure is what? A new structure is formed. That is bullish structure is what is formed in the market. And then also when the market is changing on a downtrend, that is for break of structure becomes price continuation, an uptrend or price continuation. And then also change of character becomes um, price continuation on what? On a downtrend, right? So over here, we are going to see this year, we have bullish structure, right? So when you come to bullish structure, we are going to see um, break of structure and then also change of character here. So we are going to set it up. Okay. So we can, over here on the setup, we can decide to change the colors as we want to see on the chart. Okay, as we want to see on the chart. So maybe we can decide to make it deep, either light green or deep green as it is. So maybe I prefer to use the same. Okay. All right. So let's check the bullish structure to red. Let's see the color. Um, okay. Red is okay. Should we use red or we should change the color? Let's see this. Yes. All right. Now, when we talk of internal structure, what is internal structure? So we have two forms of internal structure here. That is, first we have bullish structure and then also bearish structure, right? Bullish structure and then also bearish structure. So basically, when we talk of bullish structure, that is when the market, okay, is moving upwards. When the market is moving upwards, or co-host, please do your work for me, okay? All right. So Grace, kindly assist. All right, let's proceed. So basically, when we talk of bullish structure, that is when the market is moving upward. When the market is moving on an uptrend, forming a higher high and then also higher lows. That is when we say it is on what bullish structure, right? Good. So we may have break of structure and then also change of character on a bullish structure. And then we also have bearish structure. So on a bearish structure, you may also have break of structure and then also change of character on a bearish structure. So basically, when we talk of bullish structure or bearish structure, that is when the market is moving down, forming a lower low, and then also a lower high, right? So when the market is forming a lower low and then also a lower highs, we may see that to be part of what bearish structure, right? So over here, when we talk of real time internal structures on the charts, as we set it up and then also get back to the charts, we may observe that. So when we consider or real time, when we talk of real time internal structure, that is, we consider it as a short term price drop, okay, or price movement of the market, a short term price movement of the market, which simply means when the price is particularly or presently moving, it may not move on a long term basis, but then on a short term basis. So the short term price, or let us assume maybe movement of the market. That is what we mean. We term it as what the real time internal structure. So on our chart now, whatever we've set it up here, when you go on our chart, you are going to see it. So let's go back first. So again, the colors that we chose first, that is the first one is what is green. Then also the second one is red, right? So when you go there, we are going to see that, okay, that is green and red. So that is what we have here. So that is what we have here. And don't worry, we'll get back to explain what we are seeing here on the charts, right? So whatever we are having here, based on what we chose as the colors that we chose as for our internal structures. Okay, now let's proceed with the setup. Okay, so I guess okay, now let's move on to the next one, that is real-time swing structure. Sorry, real-time string structure. So we also have bullish string structure and then also bearish swing structure. Sorry, bullish swing structure and then also bearish swing structure, right? So when you talk of real-time swing structure in the market, sorry, when we talk of real-time swing structure, that is how prices, okay, smart traders, or how big we may be able to read the chart. So a big picture of the trend, the big picture of the trend. So in every trend, you may view it in two ways. One a bigger picture of the trend, and then also a smaller picture of the trend, right? So when we talk of bullish swing structure, that is the big picture of the trend. So when the price is breaking, let me clean this. So when the price on the chart is breaking and forming a new high swings, a new high swings, you may see that we may term that as real-time swing structure. So now the reason I'm doing this is on the smart indicator, everything is set up already. So our responsibility is to be able to understand these few terms, and after understanding them, it has been expressed on the chart, right? So when you open the chart, for instance, as when you click on OK, when you get here, you know that this particular line, you may know the reason why this line appears to be so, right? You may know the reason why this line appears to be so. You may know the reason why this appears to be so. So it wouldn't put much stress on your decision making in the market. That is the reason why I said we should go back to make that setup. I believe you are following. Let me know. Are you following? Let me see. Okay. Are you following? Let me know. All right. Mm, Then let's proceed. So let's proceed with the setup. Okay. All right. So over here we have bullish structure, then it's bearish structure, and I guess it's okay. Just as we've said the first one, we are going to use the same. Now let's come to other blocks. Other blocks, right? Now when we talk of other blocks, we have, let me see. When we talk of other blocks, that is where smart money, or I would say the footsteps of smart traders, right? The footsteps of smart traders. So basically, when we are talking about other blocks, that is an area where institutional traders begin to do what? Enter the market. An area where institutional traders begins to do what? Enter the market. So their entries, areas where they decide to make entries is where we term it as what? Other blocks. OB. So in our lesson, as we continue with this lesson, you may hear of the term OB. I may not use the word other block, but I may term it as OB. So and not in OBM. So take notice of that. Not OBM, but rather OB. So if you did not hear the word other block and then you see OB, take notice of that. I'm not mentioning human name. eh? All right. So over here, you can see we have internal other blocks. Internal other blocks. So that is where we are going to do our next setup. And basically, when we talk of internal order blocks, we have external order block and then also internal order blocks, right? Internal order blocks and then external order blocks. But over here, when we talk of internal order block, that is the smaller footprints or the smaller areas where institutional traders place orders. So the smaller areas, let me see. So the smaller areas where institutional traders place their orders in the market. So in this case, it may not be the bigger picture, but then the smaller area where institutional traders begins to do what? Position themselves to take to dominate the market, right? That is what we term it as the what? Internal order blocks. So those may not be the bigger picture, but then the smaller areas where institutional traders intend to place their orders, right? So we have bullish internal order block and then also bearish internal order block. Let's do the setup here. Let's do the setup. So we can turn on the other swing blocks too. So let's turn it on. Then we also have the all right. Let me see. Okay, so let's talk about the internal bullish order block or internal OB. So we can also set that one up. Which color should we use? Should we use blue? I guess deep blue will be okay. Deep blue will be okay. Okay, so let's see. So far we've not used blue here. Okay. So I guess deep blue will be okay. So when we talk of internal bullish order block or internal OB, what does it mean? When we talk of internal bullish order block, as we may see it on the chart, what does it mean? Now, when we talk of internal bullish order block, that is small zones, or let's see that as small areas inside the structure. Okay, so small areas inside the structure. So that one too may not be a bigger areas or a bigger picture of the chart or of the structure, but then small areas inside the structure. That is what we term it as internal bullish order block. So we may see that too on the chart as we set it up and get back. Now let's click on internal bearish order. So let's change the entire color. Which color is this? Yesterday I told you I'm color blind. So today too I'm still repeating the same thing. Okay, so let's use this and proceed. We also have bullish order block. Bullish order block. I guess let me talk about order block mitigation, right? Order block mitigation. So when we talk of bullish order block mitigation, let me see, where is it? Order block mitigation. Okay. So when we talk of order block mitigation, that is an area where price revisits, or so when the price rise and then it's dropped back, before it would still take another peak, the price will surely have to revisit a particular angle or area in the market before it will still go back or rise or fall again. So it's either it is on bullish or bearish. That's what we, in an actual sense, we may call it a pullback, right? So it rises to a certain point, then it drops back to a certain angle before it takes another peak. If it is bullish to, if it is bearish, it rise, then it drop back to this angle before it takes back again, before it drops back once more. Do you get it? So anytime the market begins to take a new strength or a new length, first it may rise to a high momentum, then drops to another level. So if it is bearish market, you may see that the trend may go a little bit up, then will drop very high again. Then it will take another trend before it drops very low. So that is what we may term it as order block mitigation, right? So all right. I know this may feel a little bit complicated, but I believe as we get to the charts, it may be so easy for us to understand. And basically, I actually don't want to complicate it at all. When you join us, mute your call. right? Mute your call. You are here to learn. So when you join, just mute your call and stop all the forms of distractions, right? When you join, just mute your call and stop all those forms of distractions. All right, let's proceed. Okay, so let's check the next one. That is bullish order block. Bullish order block. So which color should we use? Which color? Should we use brown or what? Let's see, is it green? Which color should we use? Okay, let's proceed. All right. So then let's look at the bearish order block. Okay. I don't know which color is this too. Which color is this one? Is it brown? Grace is Grace here. Is it brown? Okay. So now we may also see equal high. So wherever we see all this, so on the chart, when we open the chart we are going to see EQH and then also EQ, that is equal highs, equal high, and then also equal lows. Okay, equal highs and then also equal lows. Yes, so on a price swing in two different waves, that is forming an equal high or equal lows. So anytime we open a chart, we are going to see, and this one has been simplified on the chart already, so we are not going to determine that, but everything has been determined using the Algo smart indicator, right? Now, so I guess over here there is nothing to set, so let's leave it. Now let's look at the fair value gaps. Fair value gaps. So we have the bullish fair value gap. Where is it? So bullish fair value gap and then also bearish fair value gaps. So when we talk of a fair value gap, this is it. How do I explain that? Okay. So when we talk of a fair value gap, that is a gap between candles. Okay, a gap between candles. Maybe where buyers are strongly in possession, right? So a gap between candles where buyers are so strongly in possession, such that even sellers cannot take balance or sellers cannot control. You see, I mean, when we open a chart, you may see that if this is a candle, it may form red, red may appear, and then also green may appear, which simply means buyers and sellers, one of these two are trying to push the market or dominate the market, right? One of these two are trying to push or dominate the market. So when we talk of fair value gap, let's assume um, this is a candle. There is also another candle here. Let me clean this. Okay, so there is also another candle here. Then there is a small candle appearing here below another candle appearing here. So when we talk of a fair value gap, we said a gap between candles where buyers may be opposing or strongly opposing the market. So in this case, if this place happens to be sellers, this place happens to be sellers, this candle may just appear here. This candle may just appear here just to distract, such that it may be bullish candle. So in this case, sellers may not be able to dominate this particular candle, right? So that is what we are terming it as what? As fair value gap. So you may see that to be as bullish fair value gap. Let's do the setup. Now on the indicator, we are going to see all those things appearing there. So we just need to understand how it works. So is it green? Okay, let's use this. Is it light green, right? Okay. And let's look at bearish fair value gap. Bearish fair value gap. So let me see. This is red. Are we going to use red? Or since red is okay. All right. Okay. Then the highs, then the lows, the minimum time frame. Let's use daily. Okay. Let's use daily. All right. That is fine. Now let's look at the last part, that is premium and discount zones. Premium and discount zones. I believe you are following. Let me see. Are you following? Are you following? Are you following? Can you hear me?
Yeah,
Can you
we
hear me?
lost you for a while, but you can
Oh,
continue. Thank you.
all right. Uh, okay, so let me share my screen. Sometimes the network. Okay. All right. So please make me a co-host so that I can be able to share my screen.
Race, please, you are the host. You have to make Brother Ima good. Thank you.
Yeah,
All
I've
right.
already made.
Okay. All right. So all right. So let's talk about the premium and discounts. Premium and then discounts. Now this is simple. Let's set that one to up. So on premium and discounts, we have what we call premium zone, equilibrium zone, and then also discount zone. And this is where I have my share interest. This is where I have my share interest. Basically, when we talk of premium and discounts, that is cheap and expensive zones in the market. Cheap and expensive zones in the market. So smart traders focuses on areas where they can first join the market and where someone would say they will cash out. Okay, they will cash out from the market. So these two areas may be what we may term it as what as premium and discount. So maybe you might be familiar with that. You might be hearing premium and discount. It's not anything too serious. That is where areas where smart traders join the market and areas where they walk out of the market, right? So when we talk of premium zones, that is an area where the price, let me use this, an area where the price is too expensive, an area where the price is too expensive. So in that case, when the price is too expensive, what the institutional traders do is institutional traders decide to sell their assets or they decide to sell. Okay, so if you don't know the premium zone where you have to exit, you will still be in the market. And that is where retail traders begins to buy at premium zone. So if you don't get premium zones in the market, you may end up buying where you are not supposed to buy. Whereas the smart trader may be cashing out or maybe selling, right? So a premium zone is an expensive area above what we call equilibrium. So you may see this in the market above what we call equilibrium. And we will explain that. So that is a premium zone. That is what a premium zone. So you may see that on the chart. Now the next one, that is equilibrium zone. Equilibrium zone. So when we talk of equilibrium zone, when we talk of equilibrium zone, that is an area where there is a fair value or a fair price. Okay, so price are very fair. There is a fair value price within that area. It is neither on a discount or on a premium. So in other words, it's in between highs and then what? And then lows. It's in between highs and then lows. So it's neither rising too much, it's neither falling too much. So it's in between highs and then lows. That is what we may term it as a equilibrium zone. So if it's 100%, you may say, let's assume if it's 100%, you may say it's at the 50% zone. So within that zone, we may term it as what? As equilibrium zone, right? Now the next thing, where is it? Okay, is discount zone. Now when we talk of discount zone, that is an area where price is cheap, so below equilibrium. In this case, what institutional traders do is they intend to buy, right? So our normal buying and selling Our opportunity is to observe the market where we can see what we call premium and where we can see what we call discount. So within a discount zone, that is, the price is now cheap, right? And basically, we all have that idea. When an asset is cheap, people begin to do what? Buy, right? When an asset is what? Is cheap, people begin to do what? To buy. So always what smart traders do is they consider these two areas where they can access premium and then discounts. So where they can sell high and then also where they can buy low. So if you want to understand the concept of Lux Algo Smart Indicator, interpreting the general knowledge about smart money concept, it's easy, it simplifies things because the trader would be able to use that to understand, learn, and interpret the market. So you see, the purpose of this particular indicator is to simplify what we call smart money concepts in general. Is to simplify what we call smart money what? Smart money concepts in what? In general, right? So we set up. So let's go. I think we have red. Let me see what the color that we've selected. Okay, so let's see if we can change these areas to premium and discounts. Should we maintain it or we should change it? Should we maintain it? So let's look at if you maintain the premium. Let's see if we can change the equilibrium to a different color. What color should we use? Is it black? We use black or which color? Mm, let me see. Okay, my traders are saying we should maintain it. So what was the color? Okay, my trader. Oh okay, all right. So I believe we maintain that. Okay, so now we are done with the setup. Okay, now we are done with the setup. Let's change the label size to normal. Let's change it to normal. Now I believe we've done all the necessary setups that we need to do. So let's turn on the show swing points. Then let's change it to normal. Mm, color candles, let's turn it on. Then I believe, yeah, that is all. So we have the time frame. For that one, we can choose to change it on the setup. So let's leave it maybe for now. Let's choose the 4-hour time frame. Okay, everything is intact now. We can proceed to click on OK. We can proceed to do what? To click on what? OK. Very good. So we have a very nice setup here. So based on what we've set up now, we are going to see it according to our preference. Whatever we chose, that is what we are going to see, right? So let me see. Okay, very good. So over here, we said we are going to see break of structure and then also change of what? Change of character. Break of structure and then change of character. And we said when we talk of break of structure, that is a price continuation, okay, and then also change of character, a price reversal, okay, or a change in trend, right? So in both break of structure and then also change of character signifies a change in trend, but then break of structure signifies price continuation, either it is on a bullish break of structure or a bearish break of what? Break of structure. So over here you can see below we can see break of structure here, break of structure, change of character. Now this is a bearish change of character and break of structure, right? A bearish break of structure, and then also we can see change of character here. That is a bullish change of what? Change of character. So let's scroll back. As we see all these things here, that is bearish change of character. So this is where we are seeing the highs and then the lows, the swing highs and then the lows. So as you can see, it's a higher high. Let me clean it so that we can see very clear. This is a high here, right? So an area where the price change continue to the price continue, that is price continuation on a bullish trend, right? So let's trace it back. All right, now let's look at this one that we set. We chose these particular colors, right? We chose these particular colors. So for us to be able to signify or identify various premium and then discount areas, or premium and then discount zones. So let's get back. Very good. So we can see the strong low, and then let me see. How is the strong high? Uh, I guess it's not here. Okay. All right. So we are going to see a strong low here, where we may signify our easy discounts. And we said when we talk of the discounts, that is an area, right, where the price is sold at or there is a cheap price of what of buying. That is what we term it as what, as a discount. So over here, what this smart indicator does is, instead of the trader to spot the areas himself where premium exists, where discount exists, where there is a break of structure, where there is a change of character, and then also where new price swings, high lows, and then also high highs. Using this smart indicator would be able to spot out all those zones for you. Will be able to spot out all those zones for you. So either equal highs or equal lows, it will be able to spot out all those zones for you to be able to understand. So what we are going to do is, in our next session, that is if God permits tomorrow, what we are going to do is we are going to look at areas where we will be making entries, how we can use the smart indicator to make entries in the what in the market, in combination with maybe fib retracement, okay, Fibonacci retracement. So that is what we are going to do, God permit, tomorrow. So the main purpose of this lesson is for us to be able to simplify smart money concepts by using smart indicators to spot out the various key areas where opportunity exists. So if God permit, tomorrow what we are going to do is we are going to look at it on the same chart, and then after that we will look at where we can be making entries and then also exits in the market. When I talk of entries, where we can um enter the market and where we can also take profits based on market structure, right? Based on market structure of smart money concepts. So let me know if there is any question before I bring the session to an end. So today we only looked at the chart, the explanation of the chart, and then also how it works. So if God permit, tomorrow we shall look at the entries, right? How we can be able to use smart indicators or how we can be able to spot out entries and exits on this same chart using market structure. So this is the structure that we are talking about. We already have the structure here. We have the setup. So what we are going to do is, looking at the setup, at what area can we say that this point in time we can make entries, and at what area can we say that we can make what exits in the market. I just want to simplify it in a brief way so that we using it may not be too difficult for us, right? And I believe Lux Algo has already done that on the chart. So we just have to find areas where opportunity exists and then also make good use of it. All right, so let me know if there is any question in the chat. Sorry, if there is any question, let me know before we proceed, we bring the session to an end. But before we do that, um, let's see if we can be able to make decision in the market. Mm, all right. So let me know if there is any question. If you want to turn it off, you just come here, you tap on it, then you click on delete, right? Once you do that, you've closed everything, right? So if you want to search it back, you just click here, you go there, you search for the indicator, then you add it up. So if God permit, tomorrow we shall look at how we will use the smart indicator to make entries and then what exits, right? Now let's see the general nature of the markets this morning, if we can be able to get opportunities to make some profit here. Those of you who are not using Craigslist pin, I don't joke with it. I'm making good use of it. I'm making good use of it. But it seems I realized something. I realized something. Um, hey, I'm also here talking. Is there any question? Okay. So come again for fair value gap. I didn't feel well because of connection. Come again with fair value gap. Now, when we talk of fair value gap, the simplest way we can understand fair value gap is an unfinished, I will call it an unfinished business in the market. So let's assume, where is it? So let's assume that the price, I guess you can see, right? So let's assume this is where the price began, it rose, then it drops to this particular point. Now, where the smart trader decided to take his profits or decided to make his decision here, you will go back again and then get back. So he returning back to finish the work that he did not get done. The money supposed to taking out here, he's getting back to take all the money there. That is what we term it as what fair value gap. So I said we have bullish fair value gap and then also bearish fair value gap. When we talk of bullish fair value gap, that is a gap between two candles or between candles where buyers strong. Yes, someone's screen is not sharing. It's not visible. Mm. All right. So please check your, maybe let me use the whiteboard instead. It's not more, use the whiteboard. Okay. Right. So I believe you now. I believe you can see. Right. So we said when we talk of fair value gap, we have bullish fair value gap and then also bearish fair value gap. And simply we said area, when we talk of bearish fair value gap, an area or a gap where sellers may dominate the market. Okay. an area where sellers may dominate the market, and when we talk of bullish fair value gap, an area, a gap between candles where buyers strongly control the market. So in a case we said, we're assuming we have 2 candles or 3 candles, you can see these 2 very strong candles, and we have this candle here. Now the formation of this candle here is to just get back on board to ensure that the work that was not finished will get it done, right? That is what we term it as fair value gap. So in the case, it's just coming to finish the unfinished business. That is what I may term it to be, the unfinished business in the market. So where it wiped out everything, there was still something not there, which the market may reverse back to take what is there before it rises back again. So if it's bullish fair value gap, it gets back, it drops in a short period of time to down before it rises back again to normal trend, right? So just assume fair value gap to be maybe where rises drops to take back opportunity, or where smart traders get back the trade of the market to take the opportunity that exists in the market before they continue their trend, either on uptrend or downtrend. Hope it's clear. Let me see. There's any. All right. Okay. So um. So you said something about break of structure and change of character. Come again. Oh, someone saying I'm breaking. Am I breaking?
No,
Am I
right now
breaking?
you're okay.
Somehow.
Okay, so let me see. You said some break of, and what do they mean when I see them? Also, before you delete the indicator, I saw PDF. What does it mean? Right. Okay, so basically we said break of structure is continuation. Price and also change of character is what price reversal or trend continuation, not price, rather trend. When you talk of break of structure, trend continuation, then also change of character is trend reversal, right? Trend reversal. So if it's on a bullish, we have break of structure, it simply means the market is still continuing on an uptrend, right? It's the market continue, that is called break of structure, right? Which is change of character. The trend, okay, the trend is reversing. That is what we mean by change of character and then break of structure. I guess it's clear. Oh, unstable network. Oh my goodness. Can you hear me? Is it someone here is pressing the network? Someone here is pressing the network.
Now we can hear you, but formerly it was breaking. It was breaking.
So can you hear me now? So
Yes. We can hear you, but still, so the breaking is still in the existing.
His network. This Ghana and MT network, that's the only thing, the only benefits you will get, the only benefits from this Ghana MT network breaking. All right, so please can you hear me? Now what we are saying is simple. When we talk of break of structure, change of character, it's something simple. When we talk of break of structure, we simply mean price continuation, price or continuation. So anytime we open a break of structure or change of character, what we are saying is when we talk of break of structure, that is the price continuation or the trend is continuing. If it is downtrend, it is continuing on a downtrend. If it is uptrend, it is continuing on an uptrend. That is what we mean by break of structure. So if the trend is on uptrend and we see break of structure, it simply means the trend will continue or it's continuing, right? So trend continuation. And when we talk of change of character, that is price reversal. Oh, sorry, why am I using price? Trend, okay? Trend reversal. And basically, we said every market follows two trend, that is uptrend and then downtrend, uptrend and then downtrend. So the only that we see downtrend in equilibrium. Okay, when the trend is in equilibrium state, that is when we may say that okay, at this point in time, it's neither a break of structure or change of character. So in that case, it may be under what equilibrium state. Yeah. So when you talk of break of structure, change of character, that is so I believe you get it now. I believe you get it. Okay, so what's the next question? Let me look at the next question. Hello, I don't know if you can hear me. If you can hear me, give me one in the chat. Let me know if you can hear me. Yes, I don't have out of the meeting as a network. Am I still here?
We are really trying to hear you, though your line is static, bro. So at times we hear you clearly, at times the line is very static. So we're missing bits and bits. So probably tomorrow you can do a refresher slide before we continue. But you're really trying to grasp, though with some challenges.
All right. So
Yes, exactly. Exactly. That's true.
all right. So I believe, guys, we've come from afar. So someone is saying, please repeat on how you arrived at that algo indicator. Okay, so let me share my screen. So if it's not mixed up, I wonder if using coin glass and seeing that it's oversold and going to TradingView to find the crypto you see in oversold, wouldn't it be better to see the truth signal? I'm not getting your question, my dear. Okay, so let me quickly share my screen, get this done, then we call it a day for this morning. Mind you, we still have another session within the next few minutes or hours. So let's get back here. Where is TradingView? Okay. Okay. So this is how to the um indicator. Oh, Please hope you can hear me and you can see my screen as well.
Yes.
All right. Now this is how we manage to get the indicator. So yeah, very good. Click on this, the toolbar here. So let's do that together. Click there. Then we are going to see indicators. And there are numerous, which with time we continue learning them and how we can use them to benefit our trading purpose or journey. So over here, click on um search for smart indicator. Okay, smart money indicator. So the first one that you see, that is, this is it. This is it. Looks Algo. We have different smart money indicator. We have different smart money indicator. We have Algo Alpha, TF Lab. All those ones are here, but we are going to use this one, smart money indicator by Lux Algo. So just click on it nicely. Then you add it and you click on the charts. Now, as you see, if I turn it off, let me turn it off. You can see the chart is clear. Now, let me go and get it back. Very good. Now click on charts. Very good. Now you can see I have it here. You can see I have it here, right? So that is all. That is all. All right. That is all. That is all. So hope you get it. No, you can't find smart money on Binance. You can't find it on Binance. So okay. You can't find smart money on Binance. So we can rather customize. You can rather customize your Binance to your TradingView to on Binance, but you cannot find smart money on Binance. So the indicators can be seen on TradingView. The indicators can be seen on TradingView. So just get to TradingView and all right. So for free version, how many indicators can we apply on TradingView? For free version, we can only use up to 2 or 3, I guess. 2 or 3 indicators. That is the maximum you can use. I think either it's 2 or 3. Yeah, that is the maximum you can use. Can't use more than that. Yeah, only 2. Okay. Okay. Thank you, Coach Musa. So that is it. You can only use 2 indicators on TradingView for so if you want more, unless you subscribe, but I don't think it's too necessary. Well, I don't think it's too necessary. So that is it. So you were almost showing us how to get entries, but changed again. Oh, which one? Which one are you talking about? I said if God permits tomorrow, that is what we will do. If God permits tomorrow, that is what we will do. So I don't know which one you're talking about now. All right, so guys, I guess it's already late here. I said it's late. It's already late. Let's see if God permits tomorrow, because we still have another session to handle. So let's end the session if God permits. We will still meet again tomorrow. And the little session that maybe the part that you missed, I'll still do a recap on that before we proceed on tomorrow's session. And mind you, we just want to simplify this by being able to use this indicator to understand smart money concepts and also make entries then also exit using this indicator. And I believe this will help us as part of our trading journey. So let's end here. We shall meet again on another session. And so far so good. Everything is moving good. The market is good, and our signals providers, they are giving us too much money. They're giving us too much money. Coach Musa is here, and he's chopping all the money. So guys, let's learn. You see, learning is good, and knowledge is power. That's the reason why someone said, if you think education is expensive, try ignorance. So don't hesitate to learn. Always, when it's time for meetings, join the meeting, learn, and add something small to the knowledge that you have, and it will bless you. It will help you for you to do it, for you to grow. So always, learning should be your habit. Learning should be your habit. And I've always been saying, if a knowledge is a friend, if a knowledge is a friend, then he should always be with me. If a knowledge is a friend, then he should always be with me. Please, where do we find the signals? We have the signal platform. Are you not on a signal platform? Are you not there? So see your upline would add you there. Okay, see your upline will add you there. So that is what I can tell you. See your upline, and your upline will add you there. All right, so guys, I don't know if, let me see if any of my leaders are here. Okay, so Coach Mo, then Coach Musa, please, if there is anything, you let us know before we bring the session to an end. Coach Musa is here. Coach Mo, please, if there is anything, please let us know before we bring the session to an end.
All right. Brother Emmanuel, I think so far so good. I've enjoyed the session as well. It has been a good one, so much on point, and it's just now left to the attendees to go and put them into practice. Yeah, so it's they can go and now practice it, and then we see how it goes. Yeah, but there's been a good session. Thank you so much.
All right, thank you too. Okay, so I believe on this set, okay, so we will end here if God permits. So I have no upline. Please assist. Flores, let me see. Let's drop the meeting. Is it the group link? Let me drop that one here. Personally, I'm not interested in assisting too much. My responsibility is to teach. Yes. So where is the group link? Hold on, I'm getting you the signal group link so that you join. Or let me get you the revolution. Join first. Show your commitment there, and let me add you to the signal group. Okay. Right. So I'm not even seeing the group. I'm not seeing the group. Okay. All right. So please, if I share this link, if you know you are on one link, one group, or one platform, don't force yourself to join again. So we have the revolution link here. When I approve and I realize that you are on group 1 and you still want to join group 2, I'll remove you from group 1 and add you to the group 2. All right, so we have the revolution link here. The platform is here. You can feel free to join. Bring your discussions there so far as trading with Royal Q is concerned. And note, so that is all. I guess we will end here, guys. Let's end here. So join. I'm giving you a few minutes to join use the link to join the platform so that we sign out. Right? So that we sign out. Okay. Go and learn, oh. Go and learn and make money. Yes. So, guys, we will end here. Let's call it a day. We will still meet in the next session. Thank you for your time. Thank you for being here with us and have a good day. Love you all. Bye, bye, bye.